Hi, hello, welcome to all. In this video, we are going to discuss about import and export under GST test your knowledge questions. In that first question, briefly discuss how exports are treated under GST law. Exports are treated as interstate supplies or zero rated supplies. That is, under GST law, export of goods or services has been treated as interstate supplies and covered under IGST Act. And zero rated supply, that is goods or services exported, shall be relieved of GST levied upon them either at input stage or at final stage of final product stage. Next, question number second. What is there in question number second? How to explain how imports are taxed under GST? That is all imports are deemed as interstate supplies. All imports are deemed as interstate supplies for the purpose of levy of GST, that is IGST. Here all imports are deemed as interstate supplies for the purpose of levy of GST. The incidence of tax follows as destination principle, and the tax revenue accrues to the state where the import goods are and services are consumed. Here incidence of tax will arise where destination principle is taken place and where the tax revenue accrues where the state or imported goods and services are consumed. That state is liable to pay tax in case of imports. And here IGST paid on import of goods and services is available as ITC for set off against output tax liability. Whatever IGST you are paid on import of goods and services is available as ITC is for set off against the output tax liability. So you may set off that output liability. Next, IGST on import of goods is levied under the IGST Act, but the machinery of the custom law is used to levy and collect the same. What is this? In case of IGST, import of goods is levied under IGST Act, but the machinery of the customs law is used to levy and collect the same. That is related to second question. And third question, what is there in third question? Describe how exports are taxed under GST. This is already told in first question, that is it is treated as zero rated or the exporter has the option to, if it is a zero rated, the exporter is the option. For that, what is the option? Exporter has the option either to export under bond or LUT, that is without payment of tax, without payment of IGST, and claim refund of ITC or pay IGST at the time of export or claim refund thereof. So here the exporter is the option for either export under bond or LUT, that is without payment of IGST, and claim ITC, or pay IGST at the time of export and claim refund thereof. That is the two options available for when the goods are exporting, treated as LUT or other case. Next, question number 4. Is it necessary to execute a bond for effecting zero rated supplies? No, it is not required to execute the bonds. So no, the facility of export under LUT has been extended to all zero rated supplies, bearing a few exceptions, such as those who have been prosecuted for an offence involving tax of 2.5 crores. White notification number. The other conditions for executing the LUT has been specified in circular number. Next, question number 4. What is there in question number 4? Question number 5. A Limited enters into an agreement for sale of goods with B Limited. So they enter into an agreement for sale of goods with B Limited, a company based in UAE. B Limited requires the goods to be delivered by A Limited to C Limited, a company based in Karnataka. It is a company based in Karnataka. Next, whether the transaction will qualify as export of goods under GST, analyze the scenario of your comments. So question number 5 will be this, like there is A is the person, he entered into an agreement for sale of goods with B Limited, and based on that UAE, B required to goods to deliver the A limited to C limited. It cannot be treated as export under GST. It cannot be treated as export under GST. Answer question number 5 answer. As for definition of export, as for definition of export of goods provided under section 2 class 5, export of goods means taking goods outside India to place outside India. Taking goods outside India and place outside India. It is meaning of export of goods. Next, but in our case, since the given case, the goods remains in India, that is with C limited located in Karnataka, the transaction between A limited and B limited cannot be treated as export of goods under GST. It is not treated as export. Export means must the goods will be went outside to India, place of outside India. Next, question number 6. What is there in question number 6? A limited is making zero rated supply. A limited is making zero rated supplies which are also specifically exempted from GST. So zero rated supply and exempted from GST. The company has paid ITC of 2 lakhs on inputs and input services which have been used exclusively in effecting supply of zero rated supplies. So it is taking the ITC of 2 lakhs for which it is exclusive used for zero rated supplies. Next, this ITC will be treated as blocked credit because when we are using for exclusively exempted products, then ITC is not available for that inputs or input services. So this person is not eligible for claiming ITC. Examine if A limited can avail ITC of input tax 2 lakhs paid on input and input services exclusively in effecting the zero rated supplies. It is not available that ITC. It is a blocked ITC. So what is there in answer? Question number 6. Question number 6 answer will be as per section 16.2. Section 16.2 says that ITC may be availed. ITC may be availed for making zero rated supplies. Notwithstanding that supplies are exempted supplies. If it is a exempted supplies, then credit will be not allowable. However, the same is subject to provisions of section 17.5 of GST Act, that is blocked credit. Hence, A limited can take credit of 2 lakhs even if the outward zero rated supply is exempted from GST. Zero rated supply means it is a taxable supply and it is a rate will be nil. However, the credit would not be available in respect of inputs and input services. The credit on which blocked under section 17.5 of the CGST Act. So whatever the company paid input tax of 2 lakhs and inputs and input services which have been exclusively affecting the supply of rated taxes. Here A can take 2 lakhs even if the outward zero rated supply is exempted from GST. But however, this section is deals at section 16.2. However, section 15 till section 17.5 what is there? The credit would not be available in respect of inputs and input services. The credit on which blocked under section 17.5 of CGST Act. This is question number 6. Next, question number 7. Whether services of short term, accommodation, conferencing, banqueting, etc. provided to SEZ unit developers by the supplier located in the same state as that of the SEZ unit developer should be treated as interstate supply under section 7.5b or interstate supply in terms of section 8.2. Read with section 12c. Examine that. Here wherever the services are provided, it shall be SEZ developers, SEZ units and developers shall be treated as interstate supplies. So question number 7. What is the answer was provided? As per section 7.5. As per section 7.5b, the supply of goods and services to SEZ units and developers is treated as supply of goods and services in the course of interstate trade or commerce What is this? What is this? If the goods or services to such developers or such units is treated as supply a good of services in the course of interstate trade or commerce. Whereas, as per section 2(3)(c), the place of supply services by way of accommodation of in any immovable property for organizing any function shall be location at which the immovable property is located. So place of supply in place of immovable property, it is where the immovable property is located. Thus in such cases, if the location of the supplier and place of supply are same state, union territory, it would be treated as interstate supply. It is an established principle. Of interpretation of statutes that in case of an apparent conflict between two provisions. So what is the two conflict here? One is telling that it must be treated as, if you send the such units are developers, it will be treated as interstate supply. But in case of immovable property, it will be treated as per section 12(3)(c). If you are in immovable property, then location of immovable property will be the place of supply. Here it will come for interstate. So when there is a conflict between two sections, the specific provision shall prevail over the general provision. In the incident case, that is section 7(5) is the specific provision. Section 7(5) will be the specific provision relating to supply of goods and services made to such developers and units, which state that such supply shall be treated as interstate supply. But section 12(3) will be the general provision. Further, provision to section 8(2) also laid down that interstate supply of services do not include supply of services to such unit developers. It is therefore clarified that services of short-term accommodation, conferencing, banqueting, etc. provided to such units or developers shall be treated as interstate supply. It will be treated as interstate supply. That is question number 7. Next, question number 8. What is there in question number 8? Mr. Amarkant, a chartered accountant, being a partner in GST registered firm, orders a gaming software for his son from a company located in USA. Okay, he makes the payment for the same for his personal bank account. Examine whether the transaction will be liable to GST. If yes, in whose hand the tax liability will arise. So here it is a person, Mr. Ramkant is being a partner, register firm, order for gaming software from company located in USA. So one person is located in taxable territory and one person is located in non-taxable territory. In that case, who is a Mr. Amarkant is a non-taxable online recipient, will be payable by such company under forward charge mechanism will be liable. So when there is a OIDAR services provided by the supplier located outside India, that is USA company, and received by non-taxable recipient, the same will be liable to GST. Our person Chandrakant Amarkant will be a partner and in GST registered firm. So it is a registered firm. Next, it will be treated as where here that such exemption is not available in case OIDAR services, because our service provider is located in non-taxable territory by the individual in relation to purpose other than commerce, industry or any other purpose. So answer for the 8th question. The supply of gaming software is in the nature of OIDAR service in terms of section 2 class 17. The supply of gaming software is in the nature of OIDAR service in terms of section 2 class 17. The transaction is for personal consumption. of Mr. Amarkant, and payment has also been made for the personal bank account. Payment was also made for personal bank account of Amarkant and not from the bank account of his registered firm, is GST registered firm. Okay. Therefore, being an individual receiving OIDAR service for personal consumption. So, here Mr. Amarkant is receiving services for personal consumption, then he is treated as non-taxable territory person. That is non-taxable online recipient in terms of section 2 class 16. Amarkant will be using the OIDAR services. Amarkant will be non-taxable online recipient as per section 2 class 16. Next, services received from provider of services located in non-taxable territory by an individual in relation to any purpose other than commerce, industry or any other business or profession is exempted from IGST. So here our case, there is a personal consumption which is not related to commerce, industry or any other business profession is exempted. However, in the such exemption is not available in case of OIDAR services. OIDAR services is not exempted even though it is for personal consumption. Therefore, being an OIDAR service provided by supplier located outside India and received by non-taxable recipient, the same liable to GST. The tax on service supplied by any person located in non-taxable territory to any person other than non-taxable online recipient is payable by the recipient of such service under reward charge. Therefore, tax on OIDAR services provided by the company located in USA to Mr. Amarkant, a non-taxable online recipient, will payable by such company under forward charge. Next, question number 9. Separate LUT is to be furnished for every export supply with reference to the provisions of GST law. Examine the veracity or otherwise of the statement. If this statement is correct or wrong. If the statement is not correct, because 9th one, no, the statement is not correct. That is the LUT remains valid for the whole financial year. LUT is furnished, whatever the LUT was furnished, it will be valid for whole financial year, and there is no need to furnish separate LUT for each export supply. There is no need to furnish the separate LUT. However, in case of goods are not exported within the time limit specified in Rule 96A1 of the CGST rules, and the registered person fails to pay the amount mentioned in the said sub-rule, the facility of export under LUT will be deemed to have been withdrawn. However, if the amount mentioned in the said sub-rule is paid subsequently, the facility of export under LUT shall be restored. What is there here? LUT is remained for whole financial year, and it does not require separate LUTs for each export supply. Here, however, in case of goods are not exported within the time limit specified in Rule 96A. Whatever the time limit specified in Rule 96A, if you are not supplied the goods within the time limit, then the registered person fails to pay the amount mentioned in the said sub-rule, the facility of export under LUT will be deemed to have been withdrawn. It will be treated as deemed withdrawn, and as and when the amount was paid, then the facility of export under LUT will be restored. That is question number 9. Next, question number 10. What is there in question number 10? AXT Limited. AXT Limited into high sea sale transaction with BYU Limited for certain goods. AXT Limited is of the view that GST on such sale transaction is payable at the time of such sale, and basic custom duty is payable at the timing of bill of entry for export goods. So, their view is the amount is payable at the time of filling of bill of entry. It is correct or wrong? Yes, it is correct, because it is payable at the time of bill of entry only. So, question number 10 then. What is there in question number 10th? AXT limited view is partially correct. It is a partially correct. That is, supply of goods by the consignee to any other person by endorsement of documents of title to the goods after goods has been dispatched from port of origin located outside India but before clearance of home consumption. That is IC sales. IC sales, that is supply of goods by the consignee to any other person by endorsement of document of title of goods after the goods have been dispatched from the port of origin located outside India but before clearance for home consumption. The GST is not leviable. The GST is not leviable on IC sales. Therefore, AXT view that GST is payable on IC sales transaction at the time of sale is not correct. First point answer will be not correct because they are entered in IC transaction. They are treating their view is pay the tax at the time of that only. It is not correct. Next, as per section 14, Customs Act 1962, the value for the purpose of charging custom duty is imported goods is the value at the time of importation. That is at the time of filing of bill of entry. Further, IGST on imported goods is also levied at the time of filing of bill of entry. So IGST will be leviable on at the time of filing of bill of entry. Therefore, in case of IC sales, the assessable value of imported goods for levying custom duty and IGST is determined on the basis of price paid by the last IC sales buyer who filed the bill of entry for home consumption. Therefore, AXT view that basic custom duty is payable at the time of filing of the bill of entry for import of goods is correct. Is neither treated as supply of goods nor supply of services as per section para 8b of schedule 3 of the CGST Act. It is entry of import of goods is correct. And question number 9, we have missed some information that is related to what is the rule here. No, the statement is not correct. LUT remain valid for whole financial year and there is no need to furnish separate LUT, okay, for each export. However, we explain that about rule 96A. What is there in rule 96A? That rule 96A 1 is provide that an exporter of goods has to execute the bond or LUT prior to export, binding himself to pay the tax due along with interest at the rate of 18% within 15 days after the expiry of 3 months or such further period has may be allowed by the commissioner from the date of issue of the invoice for export if the goods are not exported out of India. It is required to file a bond.